done and done. See, that's why I do that. That's why I do that. You know, get a little head start. Just make sure it all goes well, because I was just talking. We don't have Cody here today, so just relying on the old skills that I have from back in the day when I used to do this by myself. It is just me. Cody is gone for the next couple days, so I'm just letting this load up for a second, make sure everything is good. I believe it is. Hello, hello. Doc in the house. Debrija? I like that. Chris, welcome. Yeah, Timber, man. Kirk, how we doing? Mr. Deerman. I like it. You need one of those towels, huh? Here, actually, I keep one handy. Yeah, it's true. We should bring the towels back out again. Lord knows we got enough of them, man. You need one of these towels. You know what it means. Let's see. This is like one of 700 that we still have, because the market refused to drop for a while there. But we're back in shape now. If you wanted the markets to go lower, getting your wish, right? Welcome to the Closing Beat. If you've never been here before, this is our daily stock market update show where we talk about the stock market. But, excuse me, also like to, share something new, different thoughts and ideas and stuff. And today's going to be a little different because we're riding solo here. But later tonight, I'm going to try this again. So maybe be a little bit early, but our Wine and Wealth class tonight will be, of course, live as normal in the dojo. But it will also be streamed here on YouTube. So if you want to come see how we do things normally on Thursday nights for clients, you're welcome to do that. It'll pop up. You should be alerted and everything. And I got a lot of good stuff, right? So we're going to kind of go back through the recession analytics and talk about, what to expect. What are we looking at? What's happened before? What's the worst it can get? What's the best it can get? Shared some of that data here with you, but we're going to go over that later tonight. So if you want, grab a drink. Could be Kool-Aid for all we care, but just come hang out with us. Very laid back. And we'll be over there in the speakeasy. Like I said, maybe a little bit early, just in case, because I don't want to wait till the last second and find out it doesn't work. But I think I got it. I think I can handle this here. Anyways, our FinTips videos, they're live. Those are also public and free for you. They're on our YouTube channel. All we ask for maybe a subscription or keep us in mind here at Jazz Wealth. Today I was talking about 401k loans when you leave your company. You got 3 choices there. So we're going over what is available and what the employer can tell you no about. So go over some of that fun stuff. And yeah, we like doing those videos. So it's if you have a topic in mind that you've been curious about that maybe revolves around what we're doing here, if we have some expertise in that matter, we will definitely share it with you. Eric's got some good ones coming up for next week revolving planning, relating to planning anyways. And so we'll be diving into that. Yeah, so that's pretty much it there. The Fed, I thought we were happy with the rates. What happened, right? The stock market just says, whoa, we're going to have a really horrible day. And what's weird is we're starting to get used to these days. Like, I'm almost not fazed by it. Like, oh, we're down 3%. Okay, right? That's very abnormal. 0.19% is, I'm sorry, 0.09% is the average daily gain in the stock market. Right? So over time, the market goes up and, we have these fits and starts, but overall the market goes up by an average of 0.09%. So when you lose 3% in a day or 4 like the other day, you got to know that if you're brand new to the markets, that is extremely rare. That is an outlier event. We're just seeing a lot of them sort of lined up with each other there. So we're going to cover some of that cool data tonight wrapped around what does this all mean and how does that work? But the Fed, reading through their transcripts there, they were really focused on inflation. Remember, we talked about this yesterday. Now, the Fed, just a little lesson for you, the Fed looks at core inflation. So they realize that the headline inflation number, as I've shown and taught you guys, that has energy prices and food prices in there. And food prices can be affected by what happened in Kansas the other day with just those cows out of nowhere. They just all died. I mean, like seemingly all at the same time. So that can affect food prices in the short term. So the Fed doesn't want to make decisions based on volatility. They want to make decisions based on accurate economic data. So they use core inflation, which takes those two things out. Well, what's interesting is they only said the word core inflation 3 times in their press conference and their release. And so they said that even if core inflation dropped, this is Jerome Powell yesterday, even if core inflation drops, but the headline inflation number does not, or continues higher, they will continue to keep tightening. So that really told you a lot. Did you see the Monday video I was talking about where we talked about how the Wall Street Journal actually sort of, or Tuesday video, where the Wall Street Journal actually gave away what the Fed was going to do? There's a lot to read into that, because even if core inflation doesn't fall and headline inflation goes higher, they're going to continue to tighten. This could be a little mistake here, right? So headline inflation driven by gas and food prices, but mainly energy prices at the moment, it means that the Fed is putting all their focus on getting gas prices lower. So when the White House said the other day that we put all of our faith and confidence in the Fed really reciprocated there and said, okay, no problem. We will fight headline inflation. They've never done that. That's not something that they focus on. So that's a little change there that I kind of caught late in the evening last night. Well, that maybe means something a little bit different there. Anyways, so with that in mind, we've got the stock market just like last time. Fed comes out with their rate decision. We're like, oh, cool, this is good stuff. The next day, oh, maybe not so good. S&P breaks to new lows on the day, and there was nowhere to hide. Well, Walmart. Walmart was up 1% on the day, and maybe Procter & Gamble, but that's it. There was nowhere really to hide in the stock market today. You got Microsoft lower on the day. These are good losses, too. They don't look like much on the screen there. These are really, really decent losses for these stocks. Apple down 4% on the day. That's new lows. You're getting into what technical traders would see as the buy zone for that one to start inching in there. Alphabet falling as well. The big tech stocks, those were the ones that led the way yesterday. They pulled us down today, man. Nasty, nasty day. You can look around at like MasterCard, very extended here, also getting into a technical buy zone for people that like to look at that. Visa would be the same thing, just a little less extended there. Financials in general, all very extended, whether you got Goldman Sachs, American Express being one of the most extended ones there. A lot of horrid pullbacks out there, unless you're a buyer. And remember, we've been talking about when you go shopping, and maybe now is shopping time, I would agree with that. So you go shopping, you're not looking for random stock, right? Just like, oh, maybe I'll go with Pepsi or something. You're not looking for that. You're looking for extension. You got your JP Morgans, American Express. Well, do this. Just do XLF in general. Here's the big financials all wrapped in one ETF. Very extended. You look for that stuff. That's where the Buffetts of the world and the big-time investors that are putting money to work because they've had cash on the sidelines, that's where they're going, is the extended stocks. You don't chase the stock that's floundering around, or what was it, Raytheon the other day? All right, it's down a little bit, but we're not chasing this one. You're chasing overextension to the downside, so keep that in mind when you're looking. If you were to use the S&P, I'll go with the index here. Here's the SPX, looking at the S&P directly as an index, down 23% year to date. This is it. Like, you have to be looking to go shopping now, right? I'm not telling you what to buy. I'm just saying now's the time, right? You did your homework, all the new lows that we've been pointing out and stuff. Okay, now it's time to go start looking, get to work, right? So anyways, down 23%. If you look at the NASDAQ, well, if you like the 20%, you're going to love the NASDAQ. It's down 32%, right? That's your big tech stocks. That's biotech. That's healthcare. Those all pulling you lower. Semiconductors. So definitely something to look at there. What's funny is if you look at the NASDAQ, just over the last 30 days, 1/3 of that has come in the last 30 days. It's official. Like the other day I was teasing it that, it's close to that. It's official. 1/3 in just 1 month there. Very, very interesting. If you look at Bitcoin, that's falling apart too, back down towards 20,000. Everybody thinks it's going under 20,000 now. I don't know. Dow down about 2%, also new lows. The Dow is still the best performer year to date. It's not great. It's down 17%, but it's not 23. And then the Russell comes in third place, down 26%. Small cap stocks, really tough to pick on small cap stocks ahead of what we're presuming is a recession, right? But otherwise, nice little place there for looking to put some more money to work too, if you are. Oil finishes up the day about 1%, even though it was down during the regular session. Electronic session, it was up 1%. Bonds also recovering from their overextended move. This is what's going to happen. This is what's going to happen with your financials and the stocks that are extended, just like this. It's extended. It's going to snap back purely because it's extended. Now, there's something really interesting happening because of what the Fed did. So think about the sentiment of the market, right? People looking to buy something. The Fed said, we're going to fight gas prices. So they don't normally do this, but they're like, we're going to go fight these gas prices. We're going to raise rates as many times as we have to until gas prices come down. That's the gist of what they said. So what happens when gas prices start going down? They will go down. They're going to go down. So what happens when they do? If we all know that the Fed is fighting those gas prices and then it appears that they're winning, that would be a celebratory reason for the stock market to bounce. So the entire stock market at this point is just waiting on gas prices to go down. Watch what happens when gas prices start going down. Stock market's going to go up, right? And so all these extended stocks will go, okay, coast is clear. Maybe it's okay. It's time to go. And so that's really what everybody's looking at the moment. It's incredible to kind of watch that. But anyways, so oil has pulled back a little bit. Energy, I think, was the worst sector here today. So we're already getting a pullback in the energy sector as a whole, which is great. That's by far the best performing sector for the year. It would be very normal for it to pull back. Remember that we talked about the spread between the energy sector and the worst performing sector. And we said, well, if you're looking for which one to buy, you buy the worst performing sector. And that's playing out also as well. Speaking of oil, when you look at oil, yesterday we saw a drawdown of an addition of 1.9 million barrels week over week out of Oklahoma there. We were expecting a drawdown of 2 million barrels. But we've been seeing this increase in supply. That's good for prices. Just keep in mind that starting next week is the seasonal time of year where we see drawdowns in oil. And so that's just going to cause more volatility there. So just a little heads up with that one. Try to give you a heads up before it happens. Gold up 2% on the day. Remember, gold does well in quantitative tightening cycles, which we're in right now. And basically, it's doing what it's supposed to do there. I would point out airline stocks. You could use Jets if you want. Also very extended. If you look at some of the airline stocks today, really anything in that travel camp, because cruise lines were down as well. Look at like American Airlines. What? Look how extended that is. Delta Airlines, even more extended. So if you're looking for airlines or something you can add to that part of your portfolio, I can't blame you there. It's not too bad to see. I know what to tell you. Anyways, moving on. Sector-wise. Let me just cover this here real quick. So, energy was your worst performer on the day, down 5.6%. Almost every single sector lost 1% or more. Consumer staples was the only sector that did not lose 1% or more. Healthcare, utilities, real estate, financials, industrials, materials, communication services, technology, consumer discretionary, and energy all lost more than 1%. And what do we got? 9, 10, 11. 8 of the 11 sectors lost more than 2%. That's a horrible day. There is nowhere to hide on a day like today. Large cap growth down 3%. Mid cap growth down 5%. Small cap growth down 4%. Those are not normal numbers. So think of it as like almost like a washout here. A washout to new lows where everybody maybe thought yesterday was kind of coast is clear. Today you're getting that washout from the final people to say, I can't take this stock market. I'm just going to get out. They're going to regret that. But that's what happened. Anyways, new highs and lows for the day. We'll just go over here. We'll use this one today. There were 210 new lows. Almost 100 stocks in the S&P lost more than 5% on the day. That's not a joke. That's not a typo. That is exactly what happened. One of those was Omnicom Advertising Group. And look at how extended it is. Like, I'm just saying the same thing over and over again, right? Horrible. CBRE, if you're looking over in that space, you got new lows there as well. I just pointed out a few that were really extended. Newell, also extended, made new lows there. MasterCard, I already pointed that one out. Very extended. Go to Discover Card as well. That fits in the same camp if you're looking for financials or something like that that's extended. Delta, I've already pointed out there, and maybe Micron, just to throw a couple different sectors in there for you. I put Micron in there as well. Stocks in the news today. Actually, was kind of a few things in the news. Amazon. You want to go shopping? You feeling like it's a good time to go shopping? Amazon Prime Day, July 12th and 13th, I believe, is what they said. Amazon Prime Day, 12th and 13th. So that was their news for the day. Carvana, the CEO, was buying more shares. He's no dummy. He bought 2 million more shares, and He's like us, man. He likes a discount. Is he running away from the stock market? Is he running away from his portfolio or hiding and hoarding his cash? No, he's buying stock. It's discounted. He's in there like, oh, it's fine, discount. Block, which is formerly Square. They are another company. This is slowly getting more headlines here. They're yet another company that is not going to renew their lease, their headquarters lease, I believe is in San Francisco, and sort of adapt that work from home approach. I don't know if that's a new world, right? I think it's a bit of a snap to one direction where we're all excited. Yeah, if we could work from home, that'd be great. Give it some time. I think we'll be like, okay, let's just get back to work. Tesla, there's a lot of news for Tesla today with the Twitter meeting that they had there, but Tesla's raising prices on cars, another 5% minimum for them. And Twitter, I don't know if this was Elon Musk driven or not, but Twitter says we're going to cancel our yearly company retreat to Disneyland because we're going to try to find a way to cut costs. And that's one of the ways they're doing it. They're not going to go to Disneyland. Oh, I actually feel bad about that one. Revlon. So they file for bankruptcy and the stock goes up 6%. For a brief moment, I was like, oh my gosh, please, not another one of these like meme stocks where everybody's going to be talking about Revlon, you got to buy it and all that. This is not Hertz, right? This is not GameStop. This is not AMC. This is totally different. These guys are riddled with debt that nobody wants to refinance. Not only that, we're not in an environment where they can go get cheap financing or raise debt if they want to. Those days are gone for the moment. So probably finished where about it should there, down about 13% on the day. Chapter 11 bankruptcy for them. McDonald's, there's not much else. McDonald's settling a French tax issue there, about a $1.3 billion mistake. And these things happen. Cigna was up on the day there. They're buying back $3.5 billion worth of shares. It's about 5% of the company. And then tomorrow, no real earnings to speak of. Baker Hughes will have their weekly rig count come out. And we are just about a week away from the changes in the S&P, which include Dr. Pepper. All right, Dr. Pepper coming there. As I said earlier, we're doing the Wine and Wealth here in a little while. If you want to come hang out, we've got lots of different data points and cool things to share with you. Maybe a different way to look at this market, right? Now, I'm not going to take the approach of like, oh, advisors say the market falls, you should buy it. I'm going to take a different approach. I'm going to try something a little bit fun. So you get to see what we, kind of how we teach clients and what we do there. Ford's riddled with debt and a lot more coming, right, Harry? They are no stranger to that. Oh, also, think about this. I saw this coming up so much. I'm like, this seems obvious to me. So I'm not saying this to be, Monday morning quarterback or whatever. I'm just saying it because I worry that if I think it, maybe I took it for granted you guys didn't know. So the Fed raises rates 0.75 of a point in an effort to slow the economy. Their words, right? That's what they're going to do. And so the question everybody's asking is, oh my God, is the economy slowing down? Are we going into a recession? Well, hopefully. Otherwise, the Fed didn't achieve any goal, right? The Fed is trying to slow the economy, being verbally and just totally transparent about that. So yes, the economy is going to slow. They're going to keep raising rates until the economy slows. Therefore, the economy will slow, right? So there's no need to guess, like, are we in a recession? The Atlanta Fed already says, yep, recession. We're there. So let's just wait for the economic bureau of whatever it is that actually labels it a recession, which, by the way, is not 2 consecutive quarters of negative GDP, right? That's what we're taught in school. That's not how they make their decision. But as soon as they label it a recession, we can all put this behind us. But the Fed raising rates to slow the economy. Will the economy slow? Yes. They're not stopping until it does. So think of it that way. Now, recessions are often great times to buy stocks, right? So I'm actually cover some of those stats later to explain that there. But yeah, it's very likely we're living it, right? So no need to worry when the term comes out. There's no need to go, oh, I didn't see that coming. It just, we're there. We could probably all agree for that. Kirk says, yeah, we're already in a recession. He gets it. Yep. Oh, there's Tandra. Yeah. Oh, you're just killing it now. Tanger is just as happy as can be, man. Got that pullback. How do you build a screen for extended stocks? Well, what are you using? Do you have a like TD, or is there something in particular? Like, if you tell me what screen are you using, I could probably tell you. First thing you want to do is just sort by a particular index, so that narrows your universe. So, for example, I just picked the S&P and say that should be enough. So you'd say, all right, of the S&P, which stocks are of some percentage away from the 20-period moving average, 50 or 200, whatever time frame you're trying to work with. And then you can actually set a percentage. You could say, I only want to see stocks where the closing price is currently lower or more than 5% below the 20-day moving average, just to have a visual. You could say, I want to see stocks in the S&P that are more than 10% away from the 20-period moving average and have been for more than 10 days, right? So you have to get a rapid sell-off to do that. There's a couple different ways you could do it like that. And there you go. TD has every last option for you to do that, so even better. The reason I say sort by the S&P, by the way, is because if you don't pick an index, then you have to go in and say, well, I only want to see stocks between this price range with this much an average daily volume and this much liquidity overall with this much volatility. So you can skip all that and just say, of the S&P and of the NASDAQ, show me prices that are far away from that. That'll help you. That'll save you time, Yeah. Oh, yeah. Specialty REITs versus diversified REITs, what's the difference? Exactly that, right? So a specialty REIT would be, we do cell towers. We go in and we take our they're smaller now these days, but we take our cell towers and we go find farmland and we ask somebody, can we put our cell tower here? And then we share in the revenue with them. Specialty, right? Or we specialize in building healthcare facilities such as ALFs. That's all they do, right? Whereas diversified would be someone that says, we invest in apartment communities, we invest in commercial real estate, we invest in hotels, and their business is any real estate that can generate a profit. And they would likely specify that it's physical real estate. It can't be cloud space type real estate. Yep. Yeah. Sorry if I missed any questions there. Meta. There you go. Oh, you got your 160 today? Shoot. Yeah, today would be the day to get you down there. Oh, right on the dot, too. Okay. So you're holding it for a year. So think of it this way, Giovanni. You're holding it for a year unless, right? What's that? Define that. I will hold it for a year and give it all that time to make my 20% or whatever you're shooting for, unless that 20% happens within a year, right? There should be a time stop on that as well. Where you say, even if it's at my goal 3 months from now, right, I'm not going to just sit and wait and hope for more. That was my goal. I just happened to do it faster than what I thought I would do, right? So think of it that way. Yep. Oh, Harry likes a discount. There you go. Uh-huh. All in time. Yeah. I wouldn't be all in, no. I think if you've been waiting to buy, you aggressively start buying. Yeah. And I'm just saying, however you're building your portfolio, I'm not allowed to say like, buy here at this price. But yeah, I would aggressively start taking my shopping list and saying, let's go to work. Yep. You think there's more Tanger? Oh, you're asking there's more. Well, statistically, there would be more. Right? 31% would be. Did I share that with you guys today? This was one of the. I'll share this later too, in case it didn't come up. So here's the data on this. So from the point that the S&P hits a 20% move from prior highs, defined as a bear market, what has happened every other time after that? Meaning, how much more did it go? So I was trying to show this the other day. I think it blipped on us. So in 1946, we hit 20% down. Then we went another 8.2% before finally bottoming. 1948 was exactly spot on, 20%, and that was it. Very close here in this 87 decline as well. Nonetheless, the average is 12% more. So you would say 32.05%, it would be very average for that to happen. Anything more than that would be considered kind of odd. We don't see that all the time. But that's the average, yeah. I'm sorry if I forgot to share that before, too. I thought I Thought I did that. Yeah. Could be inflation. Yeah, inflation could come lower. I just think that there's more day-to-day time for gas prices to show a little weakness. Yeah. George, remember video a few years back where renting your stocks and selling? Oh, yeah, yeah. Can you still do that? Can you still do that? Yeah, absolutely. It's actually more advantageous now because prices are cheaper. It was really tough to do for a while organically, meaning you buy a stock, you sell a call, because everything was so expensive. Most people, smaller portfolios, just a couple stocks, and they've spent all their money. Yep. There you go. Oh, you're welcome. Oh, you jinxed it, Brent. Brent said, "Don't worry, man. It can't get any worse." Famous last words. Yep. You know the four-letter word that you cannot say to the stock market. There's a lot of four-letter words you can yell at the stock market, but there's one word that as soon as you say that, it's over. Anybody know what the word is? It's a bad word. So if you type it, it's kind of jinxing it, but see who can guess the one four-letter word that you never say to the stock market. Now's a good time to increase your percent to your 401k? Absolutely. Yep. If you have not done so already, I would definitely do that. You're waiting for Q2 GDP? Well, you don't have too much longer to go. Yep. Harry says we're trading a range up until elections and then we bottom at that range. Yeah, we haven't even got to that yet, right? Think of all the focus and attention that's over here. And the White House is kind of pushing, trying to do their thing to get attention for the midterms, but it's not sticking at the moment. Yep. Yeah, the Atlanta Fed already said they've put their GDP, I think it's 0. So they're already saying we're good. Yep. Nope, sell's not the word. That is not the word. Is Nike oversold? Well, so this was ranked as one of the best stocks to own if you believe in a recovery in China. And I don't know how you believe that just yet, but I was reading about that. And I'm like, all right, kind of get that there. But Nike not technically oversold at the moment. Got some dividends in there. That's good. Yeah. I like the idea of legging in here, aggressively legging in. Yeah. I would not jump into the energy sector, no. So think about the exhaustion in that sector right now. So everything's great. Train's moving along. All of a sudden it's taking a break. You don't want to be the first person to buy that. This is that break that ultimately turns into chop for a little bit. Yep. So I would not buy that. Not just yet. Yeah. Next move from cash is in the mid-cap funds. Absolutely. Stop is not the word. No. Stopping Putin. Maybe that's your word. Yeah, it is. Well, apparently if this is a Putin price tax or whatever we're calling it, then yeah, we should stop the guy. He doesn't even run this country. Oh, I go too much? Did I go too far, JB? JB says, you've done enough, man. Get out of here. Yeah, averaging in would be, this would be the first day that I would confidently be saying that. Yep. Fear is not the word. Nope. The word is hope. As soon as you start saying hope to the stock market, to your portfolio, to your positions, you lost. Yep. That's the four-letter word. And ask any trader, especially the old-timers. You start throwing around the word hope, it's like bringing a banana on a boat, man. Mm-hmm. The kids these days, diamond hands. No, hope. I won't say hope. Hey, anyways, come join me later. It'll be right here. You'll see it pop up. We'll hang out. But I'll be over there. And we'll do a little wine and wealth. I am going to go with... Yeah, I'm going wine tonight. Yeah. We'll bring the special jazz wine there. So I'll be ready. Might try to squeeze in a nap. I'm just saying. One of those days, huh? You enjoy the rest of your day, and thanks for hanging out with me despite Cody not being here, because I know that's what you guys are all here to see.